We're now in conversation with the management of Tata Motors. Specifically, we're going to be speaking with Mr. Girish Wagh, who's the Executive Director at Tata Motors and looks at the commercial vehicle division very closely. Mr. Wagh, thanks so much for joining and giving us time here at NDTV Profit. Before I get into the business and the macro factor, one of the biggest aspects for Tata Motors this year will be the demerger. Do you think that the commercial vehicle division, with its robust financial performance, will be one of the biggest beneficiaries coming out of the demerger, because you're already at almost 12% EBITDA margins, and and that's considerably higher compared to the cars business. But looking forward, what are some of the key aspects that you see for the commercial vehicle division? And as I mentioned, do you see that as one of the biggest beneficiaries with the focus coming on the business by the end of this fiscal year?
That's right. I think, we are very keenly looking forward to this demerger. And as you rightly said, in addition to robust margins, I think we've been also delivering very robust free cash flows and very high return on capital employed. In fact, it is amongst the global top 2 in the commercial vehicle industry. So I think the business on standalone basis has been doing pretty well. As a strategy, actually within the commercial vehicle business, we have divided ourselves into 8 sub-businesses, 4 of which are product businesses, which are more linked to the total industry volume of that year and therefore are a bit cyclical. And then we are looking at 4 other businesses which are linked more to the park size, right? And therefore they are not cyclical. So apart from robust financials, what we've also therefore done is increase the focus on this non-cyclical businesses, which would mean that we should be able to deliver more resilient margins through the cycle and therefore reduce the impact of cyclicality onto the margin. So I think that is what we are aiming at. And in addition to that, since we are delivering robust free cash flows, we'll have cash on the balance sheet. I think that also gives us opportunity to grow within the segment.
And specifically, we have seen that the infrastructure spending was largely used to boost the commercial vehicle sales. You spoke about the non-cyclicality of the business as well in terms of macro conditions. How much of that, at least in the near term, do you see? Because we've already seen some spending from the government start, about 2.5 lakh crores is what they've spent in March of 2025. How much do you think that will translate to sales for you specifically in the near term as well?
So the infrastructure spend is very, very important for the commercial vehicle industry. And in addition to that, I would say, I think the growth that is projected for some of the key sectors like mining, steel, cement, e-commerce, and also for that matter, consumption, I think these are very important drivers for commercial vehicle industry volume. As of now, apart from the GDP and the infrastructure spend that you said, all these factors seem to be doing well. And therefore, we are quite optimistic about the volumes of the commercial vehicle industry going ahead. Yes, there will be some events which will be happening, whether it is a geopolitical event or what we are going through now currently, and whether it will have an impact on fuel prices, etc., is something that to be watched for. But otherwise, I think on a 5-year basis, we are quite optimistic on the volumes that the commercial vehicle industry can achieve.
And according to you, where do you think we are in this 5-year cycle? Because while there has been constant effort in terms of product innovations across multiple segments, do you think we are somewhere in year 3 or year 4 of that cycle? Because compared to the previous cycle, there's not too much in terms of price wars or any of those competitive intensities that have started yet. So do you think that this cycle could be somewhere 7 to 8 year cycle and we might be halfway there right now?
So, arithmetically, if one sees from the previous bottom, yes, I think we'll be in the 4th year, right? And how long this cycle will continue is something that we have to see. But the macro factors, which is going to therefore lead to volumes of commercial vehicle industry, all of those seem to be in place and doing well. And if, till the time the macro factors are positive, I think the industry volume should continue for a few more years.
The one key aspect which you also highlighted in our multiple interactions has been the fleet utilizations. That somewhere around looks to be 75 to 80%, and correct me if I'm wrong. But the life cycle of the product has also improved meaningfully for Tata Motors as well as for the industry. Where will the new sales effectively and the growth come from? Because compared to the last couple of years, the growth has been falling for you in terms of sales performance for the full year. So where could we expect the growth to come from for Tata Motors this year?
Right. So I think we need to look at this growth not only from the volume perspective, but also from the tonnage perspective. See, it is true that in FY25, the year gone by, the volumes were close to earlier peak, but still not crossed that, which was in FY19. But if you look at it from the tonnage point of view, the absolute growth in tonnage of the vehicles sold in FY25 was almost 35% more than that of FY19, because there has been a migration toward the higher tonnage vehicles, right? I believe that in a year or two, this migration would have reached the peak in terms of higher tonnage vehicles, right? So we, in fact, also went through the increased axle load regulation, which increased the capacity in the park also. So from that perspective, we seem to be reaching that peak. And after that, I think whatever growth is happening due to the end-use sector growth should lead to higher number of vehicles being utilized.
So with higher tonnage, that's also reflected in your financial performance of higher margins as well. So that points answers. You said once it reaches 50% or once it reaches that level of peakness, then the new sales come in. Apart from that, the other growth levers, if you can talk about a little bit on small commercial vehicles, you've lost market share there, but there's been a new product which you introduced yesterday as well, the Ace Pro, and that is something which the industry players which are also listed have been speaking about, the small commercial vehicle, because the competitive intensity has gone up meaningfully there. So apart from the tonnage part that you spoke about, what could we expect on this side as well?
So, see, as far as small commercial vehicle portfolio is concerned, this is certainly an area for us to improve from a market share perspective, although we have improved the financial performance of this particular segment, right? If you look at our trucks and buses, we've improved both financials and market share. Now in SCV pickup specifically, yes, we have to improve the market share performance, and that's what we are looking at. So here we have taken actions on multiple fronts, whether it is on the product front, and yesterday was a very important day for us when we launched the most affordable four-wheeler in the country, once again, in all the three powertrain options, that is gasoline, biofuel and electric. So we are quite optimistic with the performance of this vehicle. In addition to this, I think we've also made quite a few interventions in the pickup segment, which is growing more. So while Ace Pro will bring a lot of volumes from the three-wheeler back, the action that we have taken in pickup is something which should help us to grow the market share in pickup. In addition to that, I think there are some specific structural actions that we are taking for the business, whether it is in terms of the financing partnerships and network, or it is the network profitability, or it is the rural presence, the service presence. I think there are a lot of actions which have been taken, which we believe should help us to rebound in this particular segment.
Just one final question in terms of the non-CV part of the business as well, because you've seen adjacencies being built into segments like defense. That's one, at least one of them. So if you can talk a little bit about what Tata Motors is doing in that segment, and is there going to be an increased focus on that post the demerger as well? Because will there be a focus? Because I think from an accounting standpoint, July 1st is the date that you've given for separate accountings, and I think we should expect a listing of the CV division by the end of the year. So what happens to that? Because that's the higher margin business as we look at it. Apart from defense, also, if there's anything that you can talk to us about.
So as I said, I think non-product, there are four businesses which we have. Defense is certainly one of that, but we also have parts and services. We have the digital business and the smart city business, where we run the buses, manage the buses. Now, coming specifically to defense, I think in Tata Group, we have one common entity called as Tata Advanced Systems Limited, who is the front end for any of the defense orders, and they have been therefore bringing in a lot of orders to us. We have been growing in defense business in Tata Motors at a rate which is higher than the main business, right? The main product business. So we essentially supply vehicles and mobility platforms for both people transportation as well as ammunition transportation to TASL, and then TASL then supplies this to the defense. So we are certainly looking forward to this segment with a lot of focus on Atmanirbhar Bharat, right? And we actually think that we should continue to grow in this business at a rate faster than our product business.
So what would be that in terms of percentage of revenue? Would be somewhere around close to double digit as of now, the defense business?
So I won't talk about defense separately, but if you see all this non-cyclical kind of business apart from the four product businesses, I think there we are now coming closer to almost 20% of the overall revenue.
And you mentioned buses as well under Smart City. Now, if you can just talk, just one question on electric vehicle buses as well, because we've seen increased participation there under the new scheme as well. But one of the challenges has been the model which currently is operation, the GCC model effectively. As a company, are you looking to participate in tenders and maintain those buses for the time period of 10 to 12 years? Because there have been some industry players who have been reluctant to do that, and they have not been participating in these tenders. So how does that change the landscape for you?
Right. So see, even in case of Tata Motors, we participated in the first CSL tender very aggressively, and the purpose was to therefore ensure that the government's intent of electrification of city transport is made successful. After that, we were allocated around 3,600 buses from that tender, and we have supplied all the buses, and we have been running these buses very efficiently. We have been meeting the uptime requirements from each of the contract, and it would be very fair to say that I think we've used this period, because we've covered now more than 31 crore kilometers cumulatively. We've used this period to fine-tune the model, right? So we know how to ensure that the uptime is maintained, how the safety in the workshop, safety of the buses is maintained. So I think that has been kind of streamlined. We've also used this period to improve the financials of this business. I think we have been EBITDA break-even last year. We are looking forward to achieving EBIT break-even this year, for example. So I think we are in a good space. Now, as far as new tenders are concerned, we ourselves have stayed away for past 3 years. The reason being, we were looking for two specific requirements. The first one is payment security, right? And we suggested a particular payment security mechanism to the government agencies, and they were very kind to now have include that in the new tender. The second requirement that we had was of having an asset-light model, because it's very difficult to have so many buses on our balance sheet. So I think this also, our request has been accepted to a large extent. I think with these two things in place now and the experience that we have, we are looking forward to getting back into quoting for some of the new tenders.
Well, Mr. Wagh, thanks so much for joining in here at NDTV Profit, giving us your time as well as a lot of perspective for the commercial vehicle. We wish you the best for the demerger as well as the eventual listing as well.
Thank you, Puneet.
But with that is the wrap on this very special conversation with Mr. Girish Wagh of Tata Motors. Stay tuned to NDTV Profit for more.